Hello, everybody. Welcome to another bi-weekly report of Metals and Momentum here on Substack. I'm going to go through a number of different charts. I want to first start off with BBUC. This is Brookfield Business Corporation Class A shares. We've been following and swing trading this one for quite some time. And this one is entering into a downtrend. So we have a rollover on BBUC. I essentially have been calling for the price point of 41.73 or so since back in early April, right around this point right here. I had a arrow drawn on this chart here where it was creating that rounded top, and eventually we were going to come down right to this point here. And it looks like as of Friday, check this out, we slammed right down to the penny, right to my price point there, and then a slight recovery off here, but very, very slight recovery off of that. Huge down day on BBUC. This is not a great sign. Long term, I'm expecting this to roll over, but we've been following and swing trading in this pattern for quite some time here. So we were swing trading all around here. We were taking swing trades all around the top as well. But now this should start to roll over, and I'm expecting a little bit of a bounce in between this kind of general area. So if I were to draw out like a potential path here, we might expect something like this, and then I think we're going to maybe trade sideways into what would be called a bear flag, right? So we have the flag formed right down here. There's the downward price action sideways, and then maybe a breakdown lower. I'm expecting this to be somewhat support right around this price level. But if this starts to break down like in this general area, and then if it breaks down past this key support line right here, that's going to be 40.88, then we are in trouble on BBU, and this could roll over significantly. So just be careful with this one. Like I said, we are now in a downtrend in the long term, but in the short term, if you're wanting to take on a swing trade right now, I would look to maybe trade somewhere like this and then see that break closer to the top here. Remember, we have 44.49 as a resistance level. Now that we broke below it, so we should expect that sideways chop to be upward and keeping in line with that resistance of 44.49. Any price action up by 44.49, that is should be considered a key level to actually take profits in. I'm going to just measure out this so that way we can get a good idea. If we can catch it somewhere around here, maybe dollar cost average into like something like this, then you have about a 6% upside there from somewhere around this general area. So I am very cashed. I have very little cash right now because I am very much in the inverse silver position that we put on via a trade notification this week. So I won't be participating in BBUC until we take off that silver position. But it is one that I definitely wanted to bring up and call to your attention because it's a good opportunity there. 6% to the upside is what I'm looking from about where we're at right now. Let's look at NTR. NTR is one that I had a price projection on there of right at 85 or so dollars. That's my base and my price target. That takes us down all the way to here. I've been following this one for quite a bit of time. How did I get this price target? Well, if you actually have followed along and tried to learn some of the patterns here, what is this? This is a head and shoulders pattern, and how you get that downward price target is by, we can actually maybe just remove that for the time being. You see the head and shoulders, you take from the peak of the head down to the neckline there, and then that gives you that price target of let's call this $85 on the dot there. I'm projecting this to continue downward. This is a bearish signal right here, but potential bounce back up to the $100 level because you have a little bit of a gap there. When you see these gaps on the charts, they tend to get backfilled. So like if we gap down, then generally what ends up happening is you get that backfill up to, let's actually draw it out. Let's get a backfill up to here. And then I project that you're going to fill this gap right here. And then from here, you should see a bounce. The reason why I have a buy zone on the chart here is because you have that upward sloping 200-day moving average. That's our blue line right here. What could end up happening is, if I just get rid of these lines for a sec, what could end up happening is you get a retrace up this way, a crack back down to the 200-day moving average, and then a bounce from there. So we'll be watching this one closely. This is a great opportunity. Lots of price action in this one. This one is going to be very correlated to the price of oil. If oil is rising, then so is NTR. And I do foresee a little spike in oil happening in the coming days here. We are holding 94.67. That is key support there. Look at that, $2 cents away from the price target on WTI. Well, if you're watching WTI or watching NTR, you're also watching WTI. So pay attention to these very, very closely. They are very closely related, but lots of price action there. Speaking from a long-term perspective, NTR very much still in that uptrend that we like to follow in the stoplight stock section here. So any pullback towards that 200-day moving average should be bought. And this uptrend did not, it's just like it just begun. So we have the sideways kind of action, bottoming out kind of channel right around here. And then you got that sideways chop, right? And then there's the breakout that happened just a little while ago. You got that big gap up. So that is a great looking chart for this type of long-term kind of outlook that we like to follow in the stoplight stock section. So a couple ways you could play this. You could play this in the short term. You could play it in the long term. But either way, I'm just giving you the levels that I am watching closely. Let's go to HEFT. HEFT is one that I'm very interested in. This is the Hedgeye fourth turning ETF. If you read the book, The Fourth Turning is Here, that author actually created a ETF, and this is managed by the Hedgeye fund. And they look to profit from down markets, but also profit from up markets as well. So kind of good if you're a little bit new and hoping to have maybe a professional manage a little bit of a fund for you or manage a position for you. I said, this is super interesting for somebody like who is in my family, who just wants something relatively safe. But you've seen a lot of volatility here, and I am following this, looking to swing trade it. My current forecast right now, this is actually very bullish. So long term, I actually do think this is going to be a great ETF to follow. I think in the long term, you're going to see that swing upward. But in the short term, what I could see happening is you have a little bit of resistance at 26.77. We're seeing a breakdown of here that should confirm that we are essentially going to retest this support line, the 25.61. So if HEFT can get back down to 25.61, then I would definitely be interested in not only swing trading this, but also creating maybe a long-term play as well. If we get down to 25.61, that is actually extremely, extremely bullish, not bearish whatsoever. And I would look for further upside. I was talking with a subscriber. His name is Jeff. He just joined me on Metals and Momentum. And I was saying to him, you like to trade these channels here. So we would essentially create a channel, and you would like to probably action some of these trades as we kind of move throughout this channel, maybe trimming up at 26.77. But if we do end up breaking above, like let's say, for example, next week, for let's say something really, really crazy happens and, the market just takes off and we do one of these, right? then I would get extremely a little bit more excited, and I would look to action that trade a little bit sooner. Like I said, I'm very deployed in the inverse silver trade, so I won't be actioning this next week if that's what happens, but it could take a little bit of time to actually break through. In that case, if we trade back down lower, then that would be very bullish, and we would look to move and trade in this channel here. So that's another ETF that I'm definitely interested in. Let's go through some of the uranium stocks. So this was the one of the swing trades where I actually took a loss on this position the past year in 2026. And I was worried that we were getting close to right around here and not going to actually break above and instead trade back down sideways. This is SRUUF. That's the American ticker. If you're trading in Canadian dollars, then it's U.U, but the charts look pretty much identical here. We had dollar cost averaged a little bit too high. I was kind of dollar cost averaging from up here all the way to down here, and then we didn't get the bounce that I was expecting. If the S&P 500 was going to bounce, I figured SRUUF should have bounced like 30 something percent or something like that, but we only got a little bit of a bounce from the very, very bottom here. It was a little bit disappointing, so I ended up selling this one at a loss, and people were kind of upset with me because they're like, oh, like that's unfortunate that we're taking a loss here, because I sold right around here thinking that we would kind of struggle around this area, and I was worried about a pullback. Well, look at the pullback that we're getting here today. As of Friday, May 8th, we're getting a pullback down to this 200-day moving average. If we can hold that support line, look at how far back this support line actually goes. You can go trace this all the way back to what is this? This is April 8th of 2025. There's a support line that follows right here. We got one tap, two tap, and then we've got a third tap here. If we get another bounce back towards the support line, I would get a little excited, and I would look to action a potential trade on there. For the from a long-term perspective, this is broken out and into a slight uptrend here. I would just want to make sure that we're not breaking this 19 or so dollar level. The real get the heck out kind of price point here is going to be 1856. If we break 1856, then I would look to exit entirely. But like I said, this is coming back down into the support line. This should actually bounce off right here and then go higher. That is very exciting on SRUUF or U.U. Same kind of price action happening on URNM. This is the other uranium stock that I ended up buying just a little bit too high. I think it was dollar cost averaging somewhere around here. And I said if we tap the 200-day moving average, I would buy all the way to the bottom here, expecting a large bounce up to this $85 price point. Then again, we were stalling out on SRUUF. So URNM would naturally follow because these are the junior miners. And then, of course, we're getting that pullback right up here. So I think I trimmed the position somewhere around here, made incredible gains elsewhere while URNM has been trading lower. So very interested as URNM starts to get closer to this key support line. Let's go through some of the soft commodities that we've added to the watch list here. This is wheat, corn, and cane. Okay, so wheat is actually in very good shape. This is going to start to uptick, and in the long term and in the short term, this is also very bullish kind of consolidation that's happening in wheat. So we took on the swing trade of wheat somewhere around this general area. I sold it up closer to here. We've since seen that pullback. And this is actually quite very exciting indeed. I am not taking a position right now because, like I said, I'm very in the inverse silver play. But if I did have some cash available, I would 100% be buying wheat here. This is amazing consolidation consolidation. You have the breakout. Let me make a little marking. So you have a rise up. This is what's called a bull flag. You have a breakout, and now we're getting a retest. What should end up happening is you're actually going to break this this little zone of resistance on the next upswing in here. And I have a price target of 26.92. Now, I probably wouldn't hold all the way up to here. I would probably look to trim right around this level. That would be like 20, let's call it $25 or so. I would look to trim it off right here. That's going to be an excellent gain if you are able to catch it somewhere near where we're at here today. That's going to be an 8.2% gain. But also to the upside here, the max upside would be 16% off of around where we're at right now, or let's move that up. So it's like closer to 15% off of where we're at right now. And then I would look to take off the position if we broke down lower and back into this channel here. So your upside target, 15%, max upside is going to be 15%. But again, I would probably trim that off somewhere close to here. So you got 7% to the upside in a more conservative type of play. But to the downside, your risk is only 3.8%. If you break down back into this channel, then I would probably just look to exit the trade and take that small loss. But lots of areas of support down this way here. So realistically, you could probably hold this and look to trade even or purchase more shares even around here, but it would just take a moment to break out of that the green channel that we've highlighted here. But overall, this to me, wheat is looking like long-term bullish and short-term bullish. If I had some cash right now, then I would definitely be purchasing shares of wheat. I think one of my subscribers jumped too early into cane, and I said this is not breaking out into like a long-term kind of pattern here. This is not an uptrend if we break above the 200-day moving average, because one of the things that I was watching is this giant wedge pattern. And if I go all the way back here, let me get rid of this. Let me just crush this down. Look at, we've got one area creating the wedge here, 2, 3, 4, there's 5, and then almost a 6th right here. And what are we getting right now? We're getting that pullback, breaking that 200-day moving average, and it is likely going to come back down to this support line right here. That's going to be $9. We need to watch this wedge pattern play out and wait to buy that breakout. Like I said, for people to just sit tight on cane for a moment, because, you know, yeah, there was a little bit of upside. Like I think we were, when I was talking with a subscriber, like maybe you get to the 200-day moving average, but your downside is like here. So this is only a 6% gain that you've made so far, which is okay. That's great, but not like, you also had some downside when we were talking about it back then. Right now, from here, your downside is even worse. Like if I just put a target right here, you've got resistance on the wedge pattern. That's about 4.5% to the upside right here. And then you're coming back down, and then you got 8% to the downside. That's not great risk reward. That's not how I wanted to play it. I was cautioning people, you know, when we were talking about cane, be careful on this one. Your upside's about that 200-day moving average, and that's exactly where we're at right now. This to me is signaling that we're coming back down and likely going to touch 905. Remember, cane is not sugar is not the commodity that is affected by the Straits of Hormuz. So this is getting a little bit of a bid, and it just didn't really make any sense back when we were talking about it in the last 2-week period. But if we pull back down here, then you have quite a decent amount of upside to that wedge pattern there. And I might consider playing that if you know, our silver position plays out, because think about this, like your upside here, probably about to that 200-day moving average, you would probably have something like less than like a 1% downside, but 8.5% upside to that 200-day moving average as that starts to slope downward right around here. So if we get something like this over the next couple days, then we could get that bounce to the 200-day moving average and then bounce here. But really what we're waiting for is, are we going to break up out of the wedge, or are you going to break down out of the wedge? Honestly, not really too confident on this, the Kane ETF or the Kane ticker right now. It could go either way, upside or downside. I don't really see why it would go up at this point in time. But that is just my opinion. The one that I was pretty excited about was corn. Corn is one of those commodities that is getting affected by the Straits of Hormuz. This has broken up, just beginning its uptrend right here. So you got that slight tick up in the 200-day moving average. We swing traded this. I can't even really remember where we got in, somewhere around here or so. And then I exited closer to right here. We're getting a pullback right now, which is great because, you know, same thing like on wheat, you can kind of create a little bit of a bull flag here, sideways consolidation to the downside. There's your break, retest, and now this looks like it wants to go higher. In the short term and in the long term, I'm actually quite bullish on corn, looking to see that uptrend and actually, you know, make some move to the upside here. I think your upside target actually is close to 1937, and then like on sugar, you know, you do have a little bit of a wedge pattern kind of playing out here. A little bit awkward because you broke up to the all-time highs back in 2022, and then look at how many times you've actually tapped this support line. Like you almost touch it right here, almost touch it right here. And then all along in 2023, you're banging on this edge and then a little bit of a pop to the upside there. So I would say that is solid support. And then I would treat that with respect when we get a little bit higher on corn. And if I were to place those risk reward kind of markers, because I know those are pretty helpful to see, you know, what's the upside, what's the downside from where we are here today. Your upside, let's go to 1937. That's about 4%. Your downside here is about 3%. But I would probably say, you know, you probably want to lay out that channel. And I would just create like something like this. And then that would give you that channel. So that way you know that, you know, if you break back into the channel, then it's not as good of a setup right now. So I would probably look to trim somewhere below 1821. So not great risk reward from where we're at right now. But I mean, long term, this has entered into an uptrend, and we should see just like a slow grind upward as long as, you know, we hold this key support line, which is $18. If we come crashing below $18, then I would say, all right, game off on that one. Then we'll look to move on. So I think that is all. So I hope you guys enjoyed the biweekly report. Thanks for the new subscribers who have joined me here. And if you like this kind of breakdown, then let me know in the comments on Substack. I really appreciate that. And we will see you in the next one.